Hey, how's it going, guys? Thank you for joining me on this week's episode of The Real Deal. It was pretty cool. So I was just out picking up some Doze Bros and pod hats at Mercado de los Cielos. If you guys haven't been there, I recommend checking it out. They got a little bit of everything. I went there for the first time about 2 months ago, and since then I just find reasons to go there because of the food, because of the snacks, all the little stuff. A little piece of Mexico here in Phoenix. Anyways, well, I'm in Peoria, but that's in Phoenix. So today we're talking about home values versus interest rates because that's a really big topic of discussion right now. How low interest rates really are compared to what they were last year or the year before that, and how that relates or translates to your monthly payment compared to rising home prices. One of the biggest things that I hear from clients is, hey, prices of houses have gone up, and because of that reason, I want to wait for the economy or the pricing to go down. And that's okay. I mean, if you can wait 5, 6, 7 years for a house, by all means do it. But I mean, that's just unrealistic. With real estate, you purchase when you're ready to purchase. You're comfortable with the monthly payment that you're comfortable with, and then you let the economy and you let the market do its thing. It's going to go up. It's going to go down. It's going to go up. It's going to go down. You're never truly going to time it absolutely perfect, but sometimes you get lucky and you can. I mean, it's definitely a rare thing. But let's talk about interest rates and how those affect your monthly payments, right? So I'm going to take the example of a mortgage or a purchase of $250,000 with today's rates with decent credit. I'm not talking spectacular, just decent credit. You're probably getting around a 4.5%, which I know it's really good rate. To my clients that have purchased in the last 2 years. Once again, I would recommend you guys a refinance if you guys have that option available. If you use down payment assistance, unfortunately, you can't refinance for 3 years after 2018. So just something to consider. But let's look at interest rates and let's compare what purchase price would do versus what interest rate would do. So we're looking at a $250,000 house with 3% down. It's normally 3.5%, but you can get a conventional with 3% just for ease of use. Let's just do 3%. And then we're doing a 30-year mortgage, 4.5% interest rate, property taxes and everything. That's about, that's pretty accurate. No HOA, monthly payments about $1,576, right? This same house last year probably cost about $240, right? So it's not like the prices doubled from one year to the other, and they're not going to double from one year to the next. So this house was about $240,000 last year. So let's go ahead and adjust the price to $240, and let's adjust the interest rate to what they were last year. And I went through my emails because I get lenders that send me interest rates every single month. And I compared the interest rates that they were sending me last year to what they're sending me this year. And almost every single one of them was at least a point difference. So let's just make it easy and let's do 1% difference between last year and this year. So let's go ahead and take that same house, maybe $10,000 cheaper, okay? So we're at $1,576. Let's go ahead and drop the price to $240, but let's jack the rate up to 5.5 because that is about what they were closing for last year. So now you got the same exact house. Yeah, it's a little bit more expensive, 10 grand. But your payment's higher because of that interest rate. That's how much of an impact an interest rate makes. So when I put out these videos and you watch these news articles or you watch the YouTube videos, everything, and they talk about interest rates being historically low, it's not. It's for real. Like they really are that low, and that is the difference that an interest rate makes on your home purchase and your affordability and your monthly payments and how much you can qualify as far as a house. You just saw the payment go up $100 a month on a house that was cheaper last year. So quit living in the past. Quit thinking about a house that you could have purchased last year that was $10,000 cheaper because you saw your neighbor sell it for $10,000 cheaper, even $20,000 cheaper. Let's take it a step further. Let's say somehow that house was $20,000 cheaper last year, which is highly unrealistic. It's still cheaper with the lower interest rate. Even at if we compare $230,000 house at a 5.5 interest rate versus a $250,000 house at a 4.5 interest rate, you're still going to pay less money on your monthly payments, right? So a lot of clients, a lot of people, they get, that monthly, or excuse me, that purchase price stuck in their head. At the end of the day, the market's going to do its thing. One way or another, you'll get your money back. If you hold on to that house, the market goes down, you're going to get your money back. no matter what. It's guaranteed. That's just real estate. If you look at the history of real estate, it's always down, up, down, up. But if you hang on to it long enough, you're going to be able to make a profit on it years down the road. So if you've been thinking about purchasing a house, let me get rid of my logo because that's just popping up. If you've been thinking about purchasing a house and you're stuck on the idea that it was a little bit cheaper last year, trust me, interest rates 100% make that argument obsolete. Get into a house. If you do currently have a house, great. Congratulations. Refinance that house. Talk to your preferred lender. Talk to your current mortgage company. Give me a call. I'll set you up with a great mortgage officer that'll give you a great rate. But take advantage of these rates, please. If you guys have friends, family, let them know. They won't last. This is what they were like in 2016. People kept thinking, oh, we'll wait. They're going to last. And then boom, 2017, 2018, the rates just went up and up and up. I was helping clients purchase houses in the 6%. And that's just the reality of it. Last year, 2 years ago, interest rates were that high. Take advantage of it, guys. Okay. You guys saw it right there. It's black and white, the difference that an interest rate makes versus a purchase price. All right. You guys take care and have a great rest of your Thursday.